Cool, awesome. Welcome everyone. Nice to see you all. Enis seems to know many of you, so that makes the life easier for us. Less introductions, but super nice to have you. Super nice to meet you. If you can, and if the location where you are allows, we'd love for you guys to have your cameras on. It's nicer for Enis. It's nicer for us to see faces reacting to what we say. So if that's a possibility, we'd really appreciate that. Aside from that, I would invite G. G, can you give us just some house rules on what should people do if they want to ask questions?
Absolutely. So, guys, if you want to ask questions, you have your chat box here on the bottom, where you can just write your questions, and when the time comes, we can shoot them to Enis. And the same goes to the people watching on LinkedIn right now. If you go into the chat box on LinkedIn and shoot the questions, I will then shoot to David and Andreas.
Awesome. Thanks, G.
There are some people in this room who are literally sitting next to me in the next office. I can see who they are. Like, they're literally 3 meters from me.
So in that case, you guys can scream it, and Enis will then reply.
Yeah.
Cool. Before we start, to those who just joined, Andreas will just give a quick intro, and then we'll shoot it over to Enis to do a very, very brief presentation, and then we engage in a Q&A. Andreas, over to you.
Yeah. Hi, everyone. Today, first of all, sorry if I look a bit sick. I actually have 40 degrees of fever here, so that's super awesome. Today, we're going to have a lot of fun with Enis. Enis is going to take us through the Turkish startup explosion and make us hopefully better understand what's going on there. We know and we love Enis because we met him first through our podcast, and then afterwards through actually us doing an investment in our investment club into Enis's fund. We absolutely love him, and I'm sure those of you that don't know him already will also come to love him. I'm just sharing my screen here just to give you a bit of an introduction on who we are at the European VC. We say that we're democratizing access to European VC. And what we mean by saying that is that we have a big problem in that the best venture funds in Europe aren't available to most, and that we want to solve. We do that by building network and community, as well as adding as much value as we can to the GPs we work with. And we do that by building what we call operator LP syndicates that consist of VCs, operators, founders, angels, and ecosystem players that all invest into these VC funds. And we do that at a minimum ticket of €1,000. So that means that hopefully everyone out there listening and think Enis is a super cool guy. I'd love to back his fund and back his team. Yeah, hoodie guy, of course. Then that's definitely a possibility if you join us in the investment club. We always say that it's next generation of managers that we're backing. That means it's not the old school, it's the new guard. So that's super cool. We've got a huge lineup of great emerging managers. So aside from Enis here, if you don't like Enis at all, then join us and see if there's others. We believe this is a very scalable way to democratize access to venture returns in Europe. And we say returns and not just access to investing, because the best funds are the ones that take a bit of work to get into, whereas the less sexy ones are the ones that you maybe shouldn't invest in right away. So any of you looking to do this, G will share a link to our memo on 500 Istanbul that you can check out, so you can see kind of what Enis is all about, and he'll also share a lot about that just now. And then you can also join the investment club and signal if you wanna invest with us. So that's us. That's the European VC. I don't want to tire you much more with stuff about us. I want to put everything on Enis today. So Enis, feel free to take the floor. Let us know who you are and give us an intro to the Turkish startup ecosystem.
Perfect. Thanks a lot. My name's Enis. I'm with 500 Istanbul, and I'll just briefly touch base on that a bit later. This is going to be a boring presentation because A, this is public, B, this is recorded. So it's really impossible to make something exciting when something's public and recorded. That's why I've tried to shield some of the things that I've had on the slide, but I want to give a brief background about Turkey and what's been happening in the startup ecosystem first in the first 5 to 10 minutes. And I guess then we can turn this into a Q&A. If you guys have any questions, I'd be happy to answer them. If not, then I guess like G, David, Andreas would kind of take the floor and start asking some weird questions to me. Can you enable screen sharing, please?
Yeah, absolutely.
We also had this super weird Q&A with Andreas and David about 2 months ago while they wanted to see me in a more casual form in my house. So I was with my boxers, a t-shirt, doing my dishes, and they were just firing like random questions to me. That was fun. I wonder what happened to that.
I really enjoyed it, and I am sure that I will put it out at the least opportune moment for you, Enis.
Nice, do it. Go for it. So Turkey is going to become the 5th largest economy in 2030, and this is not me saying it, but more Bloomberg actually saying it. I hope it works out, but we have 8 years to go. When you look into the Turkish market, you see that there's been a Cambrian explosion in the ecosystem over the past 2 years, especially. Between 2010 and 2020, there was about a $1.5 billion invested into the ecosystem in about 11 years. And then 2021 alone, this number grew and kind of got into more than the previous 10 years combined. In fact, if you compare 2020 to 2021 saw about 17x the deal volume compared to 2020. So it's actually exploding. If you look into the number of unicorns, there were 0 unicorns back in 2019. And then over the past 18 months, Turkey gave birth to 5 new unicorns the ecosystem. So it's actually exploding. And this is due to many factors, but far and foremost, most importantly, there's a huge technology talent in Turkey, and that's why we're all leveraging right now, both as a fund and our portfolio companies. I'll take you guys up because I don't want to look down. Perfect. I took you guys up to the screen. I think this is all because this whole explosion, the Cambrian explosion in the ecosystem, is because the whole ecosystem has been built on a global value chain. If you look into the total liquidity in the market, first in terms of VC investments and then in terms of exits, 95% of the total volume has been done by international players. So after seed, in all of these success stories, if you look into series A, B, C, all the way towards the exit, and even in case of Hepsiburada and IPO, those were all done by global players. So we see global players, especially in the later stages, start acting up and do bigger tickets. I think this is a trend globally, but Turkey is positively impacted by this trend as well. Another interesting thing is unicorns that were led by Turkish co-founders in the US or in the UK, like Udemy, Carbon Health, or Reef, which didn't have any Turkey operations whatsoever, started to launch operations in Turkey for over the past 2 years. We see that previously the trend was, hey, start a company in Turkey and then you try to expand to the US. Now we see that even companies that have started in the US are now moving their technology bases to Turkey, where they can have better access to talent, better talent retention, and obviously cheaper costs. To substantiate that a little further, there are 50,000 engineers that graduate from universities in Turkey on an annual basis. This puts Turkey in number 2 in Europe after Germany. So in Germany, the numbers are slight higher, but Turkey comes as number 2. If you look into the growth of number of engineers, Turkish developer pool has been growing by about 15 to 17% year over year. This positions Turkey as number 1 in Europe. So given all that talent, we're able to attract more VC funding, more entrepreneurs, and more great startups who are abroad coming and launching their Turkey operations. Again, I had to shield a bunch of figures here, so hate that this is recorded. Our Fund 1 was a $10 million vehicle that we started back in 2016. We currently have 30 companies in Fund 1 who are still active. The total annual revenue of the portfolio is $600 million. But more importantly, only 3% of that $600 million come from Turkey denominated in Turkish lira. This shows how well us as fund managers, but more importantly, our portfolio companies were able to hedge against the local market and build companies who are generating revenue mostly from the US and somewhat globally from Europe or Southeast Asia, while having their technology teams back at home. About 3,600 people are employed by these 48 companies in total, Fund 1 and Fund 2, out of which about 60% of them are employed in Turkey, whereas, as I've said, only 3% of the revenue comes from Turkey. And we see that happening more and more. So the first generation of success stories from Turkey were more local powerhouses, where the main differentiation and the main moat becomes the fact that they're local and they're the category definer in their own country. Whereas the new generation of success stories, starting with gaming companies like Peak Games, like Dream Games, like Spike, but moving on to more B2B SaaS success stories like Insider, which I'll come to, are more global companies with technology offices back at home. And there's a new way to become a unicorn from Turkey. You don't have to just differentiate by being local. You can also start local, then become fully global while still employing your talent back at home. Again, the whole slide is shielded, so I can't say, but if you were able to see the slide, you would have seen that our TVPI and IRR figures have been going up and up for the past 5 years. And we've been a top decile fund for the past 2 years, I guess. We've been top quartile before that. And I feel like we're going to continue to be a top decile fund for the next 4 or 5 years over our fund life cycle.
You can always read our memo, because we share at will that all the stuff that Enis don't want to share. Nah.
Yeah, we try not to market the fund. So yeah, you see green boxes all over the place.
Yeah.
Just to substantiate what I'm saying a bit further, Carbon Health is a US company. They have more than 100 clinics all around the US. They generate hundreds of millions of dollars of revenue, and they raised more than $500 million to date. So obviously cost is not a big issue for them, especially in terms of hiring developers, given that they serve thousands of people. They have more than 1,300 employees in the US. The fact that to hire developers for them is not their main cost base, but still they're growing their hardware team in Turkey. So they've built a Turkey team about 8-10 months ago, and now they're trying to scale that for hardware operations especially. Another good example is Insider, the company that I've just mentioned. Their team currently is about 800 people, less than 1,000, but they're operational in 25 countries. So they're one of the leading players in 20 of these 25 countries. They're one of the top 3 players. They've just raised a huge amount and became a unicorn about a month ago, yet they still continue to scale their technology operations in Turkey. Even some of these countries that they service, especially the ones in Southeast Asia and MENA, they're servicing from Turkey. So as they look into markets like Korea, Japan, Singapore, etc., of course, they have some local operations for sales, but most of the account operations and account executives are based in Turkey. And lastly, Firefly. Firefly built these devices who are mounted on top of vehicles to do digital out-of-home advertising in a programmatic way. And they've raised close to $200 million to date, and investors include great people like NFX, like Google Ventures. So cost wasn't a big issue for them from the get-go. They were able to hire people, they have the capital. But after 2 years in operations, especially Kaan, the CEO, decided that he wants to scale both the hardware team, but more importantly, the software team as well in Turkey. And they've made that move back in 2019, pre-COVID times. And when COVID hit, the fact that they had their technology operations in Turkey became a massive advantage for them. That's how they were able to acquire 3 of their competitors and become the leading company in the US in their own category. So cost of talent is not the main issue here. It's access to talent, the fact that you can get top tier talent without competing, and more importantly, talent retention. I'm actually trying to quantify that a bit further, where I'm trying to understand what the average tenure is in the US compared to Turkey, given the limited number of alternatives. As long as the company is doing well and is able to pay well, way above the market standards here in Turkey, you are able to retain that talent for 8 or 10 years to come, which is what Firefly has been doing for the past 3 years. So I just wanted to show these 3 distinct category of companies, one of them starting in Turkey and then growing internationally, but the other 3 especially, Building to One, Carbon Health, and Insider, and Firefly, who were able to start in the US, raise huge sums of capital, but then deploy tech teams back in Turkey. So this whole value chain starts with talent, and Turkey's been able to cultivate that talent more and more, and moves on to VC funding and liquidity, which is where international players come here, which resulted in this huge Cambrian explosion in the ecosystem in the past 18 months. So this is my weird, brief, 5-slide, no information presentation.
That's beautiful. I particularly think it's interesting, Enis, to jump a bit into how do you access Turkey as an investor that comes from the outside. I know we have a bunch of VCs from Europe listening in, and when we all saw UiPath explode in Romania, and then everyone wanted to go to Romania, and it's something like that is likely to happen in Istanbul over the next coming years. So I'm curious to hear how you think about that.
It's actually happening. When you look historically, we were able to see international funds lead deals, which were like $20 million plus rounds led by international players. But with Trendyol becoming a decacorn, Getir becoming a decacorn, Peak becoming the first $1 billion plus exit, we saw that international funds started to look more and more into Turkey, and round sizes that are like $3 to $5 million are easily now led by great funds like Griffin, like Index. So it's already happening. And when you compare Romania to Turkey, of course, UiPath, huge success story. But there are not 7, 8 different unicorns that you can talk about, which is different in Turkey, where A, we see a lot of local behemoths, local dominant companies becoming unicorns, and B, multiple gaming companies becoming unicorns. So when someone paves the way, it actually becomes very encouraging for a number of people to follow suit, which is what happened with, again, local regional success stories and the gaming companies, and now the third vertical is B2B SaaS. I hope new unicorns come out of Romania as well, because it's one of our countries. We do a lot of investments in Romania, but I think in terms of market potential and number of outlier success stories, Turkey is by far the leading country in the region.
It's actually one question that I've been pondering is, we've done a deep dive on Romania as well, and the Romanian ecosystem from an investor standpoint isn't, there's still a lot of the old style investors that squeeze very hard and so on. Is it the same in Turkey or?
Not anymore. So in Romania, the old style investors, both from a mentality and philosophy perspective, but also from a cap table perspective, can be really deadly to the company. And we passed on at least 3 deals in Romania because of cap table issues, even on seed stage. We used to see that a lot in Turkey as well, but I think just from a maturity perspective, this has changed significantly. If you look into Turkey right now, in these market reports, you would see that there are 50 funds, 60 funds active, which isn't the case. So this is not like Poland where there are 80 different funds operating, but still there are at least 25, 30 funds who are operating. And the playbook is pretty straightforward. So we don't see, let alone A type entrepreneurs, we don't even see B or C type entrepreneurs fall into that trap.
Yeah, okay. That's good to hear. One in the audience asked about gaming and why it is that Istanbul has grown up to be so good in gaming from the beginning.
I like randomness, so I don't think there was just one answer that would explain how this developed over the past 20 years and turned out to be this boom in the ecosystem. I feel like even one company can change a lot in an ecosystem, which is what Peak Games did with Turkey. It created this whole multiplier effect where more investors wanted to deploy more capital even back then, and gave birth to Gram Games, for example. And then the alumni of these companies were able to build huge companies like Spike, Dream, Bigger, Ace. So all of these, like 4 gaming companies who were the ones that raised the most, were people who were either co-founded or worked at Peak back in the day. So even one company can create this, which is also what happened with a lot of ad network businesses in Israel, in New York. It's not that Israeli people were really great at ad networking, no, and building ad networks. It was more arbitrary, more random, and that like spillover effect happened in gaming in Turkey. So I don't believe in these philosophies that would take us 20 years back and explain why this kind of happened. I think it was much more random than that.
We have a couple of questions on specific industries, and instead of boring you with asking each one, I'd reverse the question and say, from your perspective, in the ecosystem, what are the verticals, the sectors, technologies even, that excite you and that you as a firm are actually really looking into and feeling excited about?
Yeah, instead of looking at this from an industry perspective, we like to look at this into a technology inflection perspective. And obviously, this is nothing surprising, but we were really bullish on AI and ML infrastructure companies. So we did 10 investments from our fund too. 4 of them have been in AI ML space, so 40%. What's more interesting is if you look into this from a total deployment perspective, I don't want to give any figure again because this is recorded, but 80% of our investments last year have been into these 4 companies. So although it's only 40% of the portfolio, it's actually 80% of our AUM being deployed into companies that are disrupting various industries through AI and ML, one of them in the health space, the other one in fintech space, one in cybersecurity space, etc. But again, leveraging in AI and ML and more on the infrastructure layer than applied AI or ML. The second thing is obviously decentralized ledger, decentralized database, blockchain. We looked at a bunch of deals, but we were only able to do one. Instead of trying to form theses as a fund, we're trying to back great entrepreneurs, and turns out that great entrepreneurs see trends very clearly and they all try to pursue similar things, which is why we see some concentration around AI, ML, and then B around blockchain and decentralized database structures in our portfolio right now.
Yeah. And I have to ask, because one of the questions was exactly about the health sector. What kind of deals do you like? A lot of people are always curious to know to what extent you go deep tech and to what extent you do go bio. So what do you guys like? What are you guys excited about? And considering also the capabilities of the region, right?
Again, weirdly, like we're not health focused, right? But we did 6 investments in health. 2 of them became unicorns. The other 2 have raised great Series B rounds. So out of these 6 investments, 4 of them have become very successful, not because we know health really well, but more because I guess we were able to identify great founders who knew health really well. One of them was a biotech company called Billion to One. They do prenatal testing and liquid biopsy. They just raised a $125 million round last week. Health in Turkey, we see that a lot of Turkish people abroad are doing health and they want to employ technology teams back in Turkey as well. And those were the types of investments that we did. Whereas teams in Turkey who are doing health tend to be more locally oriented. And there can be various reasons for that, but I think the health value chain is really complicated and different in every single country. So where you start really matters, and it's tougher to scale. Hence, a lot of Turkish companies starting in Turkey staying local. We see a similar trend in fintech as well. We were trying to identify industries where we would see booms with Invest in Turkey team that works with the presidency. And obviously, we see a lot of deals in fintech, a lot of investment in fintech, but it's really impossible or tough to globalize a fintech company. Same with health compared to a B2B SaaS, for example. But we see a similar boom in fintech as well. And in health, one of our big theses back then was that we were only going to invest into companies who don't only serve the patient, don't only serve the payer, can be insurance or not, don't only serve the clinic/doctor, meaning caregiver. So if there's caregiver, caretaker, and payer, any solution that's going to have a exponential adoption should have to serve all 3 of them. Not just one, not just, we don't invest into companies who complement a doctor's opinion, for example, and give this single layer, single-sided value proposition just to the founder, where the payer, the insurance doesn't even know about it, the patient doesn't even know about it. We try to stay away from those and more invest into companies who are going full-fledged into 3 of these players in that transaction. Which also meant that we had to go more end-to-end. A lot of our investments, rather than focusing on some niches, which is what we do mostly in the software layer, are more players who are doing end-to-end, trying to give something end-to-end where, yeah, sure, some of the parts are really commoditized and becomes a hurdle for us to give that, not great margins there, but the other parts have great margins, but you have to give that service end-to-end to create that massive adoption.
We have a question from Yasemin. She's asking, how do you identify great entrepreneurs as a VC? There's one angle that I would add to that, which is contrast Turkey to the other regions that you're also looking at. Is there a difference? Is there a difference in your mindset compared to what you meet in your US and Central Europe, Western Europe centered VCs?
I think the best way to make sure you identify great entrepreneurs is to make sure that you identify times where you were failed to identify them so that you broaden your horizon. So VCs love pattern matching, and we do a lot of pattern matching. You say, hey, we like domain expertise, grit, perseverance, chip on his or her shoulder, making sure that he or she is going for an outlier return, etc. So you have some 3-4 different ways to look at it. And then, oh shit, you lose a deal or you miss a deal, turns out to be a great success, which we have a lot, by the way, in our fund one. We have more anti-portfolio unicorns than portfolio unicorns. Let me tell you that. And then you try to create this new pattern. So there's not just one way to look at it, but at least me personally, I like entrepreneurs who are really good at some things and don't lack the others, but have the awareness to know that they lack. So I think I'm less of a well-rounded entrepreneur type. I'm more of an liking entrepreneurs who are really domain expertise, but they know that they lack a lot of the other things, so that they try to build a team around that. So I think extraordinary results come from extraordinary people. So these entrepreneurs have to be extraordinary at something or not. So I try to stay away from the similar to me bias, where we back well-rounded type entrepreneurs who we can speak the same, we can have intelligent conversations, etc. Doesn't mean that they can have extraordinary success stories. It just makes them more ordinary in my eyes.
Yeah, that's interesting. And would you say that you apply the same formula across the geographies you look at? And also, if we then think about sourcing, do you apply different strategies?
Do I apply this? I would say yes, but then you would see a lot of well-rounded entrepreneurs that we back as well. So I think it's all of these nuances and exceptions that make up a portfolio. I mean, if you can turn me into an if this then that statement, then I would just retire and live in southern Turkey somewhere. That's like what makes this business really beautiful. In terms of deal sourcing, so last year we looked into about 5,500 companies or so. Out of these 5,500 companies, we probably had 1,500 or so first meetings, 700 or so second meetings, 150 or so deep dives, and 10 investments. And we watch listed probably 200 or so companies along the way. Our sole purpose of existence as a fund is to do deal sourcing. So if there's anything about our team, I would tend, if there are three things about our team that I would say, our team is really horizontal, autonomous, everyone does his or her own thing. And the third thing is we're all focused on deal sourcing. Everyone has their KPIs to do deal sourcing, and we try to sync. And more often than not, we're not synced. So what a great entrepreneur is, in my eyes, is different than my partner Arun, which is beautiful. So we have to have a same perspective and market. Like some things are objective and some things are subjective. Things that are objective are product, technology, market, competitive landscape, where they fit, etc. Those things we have to sync. If we cannot sync, let's fight for 12 hours and make sure we're aligned. We have to be aligned because these are less subjective. But founder, first, like to qualify a founder and understand he or she is a great founder or not, I think that's really subjective. It's enough when one of us build that conviction. If all of us build that conviction, I mean, I guess consensus is the new mediocrity, right? So we try to not have consensus on the founder level, but have consensus on all the rest.
We also have here a question that is a bit related to something you were saying a while ago, Enis, which is about international entrepreneurs. And the question is, what is the environment for these international entrepreneurs to start their businesses in Turkey in the first place? And there's a follow-up question to that, which is, do you have any success stories? I'm curious to hear your thoughts on not necessarily only what you guys are doing, but from a macro perspective of the ecosystem. What are your opinions there?
By international businesses, you mean international founders or Turkish founders with international businesses?
International founders.
Tough. So we see a lot of companies expand to Turkey who expand to Turkey after expanding to a number of emerging markets. So in people's eyes, which is something that we're trying to beat as well, Turkey is one of these top emerging markets. So if they built a solution that's successful in MENA somewhere or Southeast Asia or India, and they want to expand internationally or LATAM, then Turkey becomes like in top 5 of that list, and sometimes they expand into Turkey, which is really counterintuitive in our fund. Is whenever we say, hey, Turkey VC fund, people put us, especially the investors and fund of funds, put us in the bucket of emerging market investing. But a lot of the emerging market investing is just investing into proven business models built by local teams who can execute well, which is really not our investment thesis. Our investment thesis is much more similar to Eastern Europe, Baltics, Estonia, Israel, where we invest into founders with technology teams back at home and revenue from more emerged technology ecosystems and technology markets like Western Europe, UK, or the US. So that's really counterintuitive. But a lot of the companies that we see launch Turkey operations have two reasons. A, they've already expanded to 3-4 different emerging markets, and they view Turkey as the next emerging market that they want to tap or test out. Sometimes it works, sometimes it doesn't, and they leave the market. We have tons of examples of that. And B, sometimes they want to launch technology operations somewhere, and Turkey, just because some weird personal connection, Turkey ends up to be in that list alongside with Bulgaria, Ukraine, and Romania. And now you see a bunch of technology companies with some development offices in Turkey.
I have a question, which I think is quite interesting, because it says that fundraising is about raising trust as much as raising money. And then Orkun goes on to ask, when are you starting to trust entrepreneurs, and how does it start? How does it grow out? Is it something that happens on a personal level, or How do you build that trust?
Trust from an execution perspective, as we invest, is rarely there. Unfortunately, you don't have the you don't have 3 months to spend with the founder to build that trust. If you have time to spend 3 months with the founder before a seed round to build that trust, chances are he or she is not the top founder. Because founders these days, given the liquidity in the markets, I mean, they find capital after 2 meetings. They don't even let you have a third meeting. So the trust from an execution and business making perspective is rarely there as we invest, and we build that moving forward, which is what the market dynamics pushed us. Apart from the people that we already knew, by the way, which is also interesting. We did 10 investments out of Fund 2 back last year. 4 of these entrepreneurs we knew from their previous ventures. So we've actually had 5-6 years of relationship with them. So that there was trust already there. Trusting people more from an ethical perspective. We try to do reference calls, check them, talk with their employees, talk with the co-founders one-to-one, not just as a group, etc., to make sure that there are no red flags. But that's more of a red flag review. If you look into our investment making process, we only give decisions based on the founder, and that's it. Anything else we do is just to make sure there are no red flags. If you're looking into a technology of a company, it's not because we're trying to build conviction to the technology. No, it's just we're making sure there are no red flags. Same goes to the market. If we're looking into the competitive environment of a company, it's not because we want to understand the opportunity industry. No, it's because A, we want to be able to have an intelligent conversation with the founder to better assess them, and B, make sure there are no red flags. So our investment decision is founder first, and then make sure there are no red flags on the rest.
We have some interesting questions coming through LinkedIn. One is, can you expand on the relationship between 500 Istanbul and Global? Can you act independently? Are your investment decisions done independently? Help us understand how that functions.
So we as the GPs, within the 500 global umbrella, we as the GPs, we do the fundraising, deal sourcing, deal making, portfolio management. So all the core fund work that you would have to do as a GP, we do it. And so we are at the investment committee, the 3 GPs, and we give the investment decisions. So we're really sovereign in that aspect, and we have to be for a variety of reasons. And that's what the LPs expect us to do. What was your other question?
I think it's also interesting. Okay, you can act independently, but then what you get out of it, because that's also very interesting, right?
What do you mean?
The benefits from being part of the global platform.
Of course. So what happens is you do the core stuff of the fund, fundraising, deal sourcing, deal making, portfolio management. That's all core GP responsibilities and the team responsibilities. And 500 gives you the platform and the brand so that you can tap into a pool of 2,700 portfolio companies, which can become customers of your own portfolio companies, potential partners, etc. There are about 1,000 perks. We can tap into that perks and say, hey, although we invested 300K or 500K to this one company, we're able to give $2 million of perks through the 500 umbrella. There are 300 mentors. There are countless webinars every day. And we have a founder hub for the whole 500 portfolio, where after we invest, we make sure that these entrepreneurs are onboarded to our founder hub, where they would have access to all these other portfolio founders, mentors, webinars, and they can go and check in themselves. And, it's more of a self-serve platform where we're trying to automate portfolio management and create and unlock, actually not create, but unlock more value out of this whole network, which would be impossible to do as a solo GP.
What about, because we've had not in this session, but we've had some people asking us, and I think it's important to clarify that there's no connection to what you guys do as an investment firm and the accelerating programs of 500, right?
No, so we're a pure seed stage VC firm. Our average ticket sizes are 750K to $1 million. We tend to get 10 to 15% ownership in companies, and we reserve 65-70% of the fund to follow on. So after investing, say, $1 million to a company, we have another 4 to 5 million reserved for follow-on funding. So we're much more of a typical seed stage fund than the accelerator. We obviously cooperate with the accelerator on different levels. Sometimes we send our companies to the accelerator so that it's better for them to onboard to the US market and launch to the US market. Might be beneficial for them. Or accelerator sends us companies that they see have actually matured in the program, and we co-invest together. We've actually co-invested 7 times in Fund 1 with the accelerator program, but we also co-invest with 500 MENA. We co-invested with 500 FinTech. We co-invest with 500 Southeast Asia. So we try to unlock more. I mean, there are more than 15 different funds that operate independently, and we really like co-investing. You will see some deals where there are like 4 or 5 different 500 global funds, all invested into the same company.
Curious, and this because this is a deep dive on the Turkish startup explosion, but we can't talk about Turkey without also talking about political climate. And anyone, and we know that perfectly well, raising for an investment vehicle into your fund, right? A lot of people are asking questions about how does it work, how big is the risk on the economy as a whole, and so on. I'm curious to ask you to expand on all that.
Of course, I think if your investment thesis relies on export revenue, global liquidity, global follow-on funding, global exit, then you have zero market risk whatsoever. And you would see similar investment theses executed in various parts of the world. Like Israel is a good example. I mean, Israel has been war for the past, I don't know, 70 years, but let alone the past 15 years where Israel has been very strong. Even if you go back to 1990s, where the perception of Israel in technology space wasn't as strong as it is today, still companies were operating and executing really well. Same goes for Ukraine. I mean, currently the situation is Ukraine is way worse, obviously, but if you go back a year, and for the past 7 years, there was war in Ukraine. I mean, Russia has already been in Ukraine since 2014, yet we saw a bunch of unicorns come out of Ukraine, whether that's Grammarly, GitLab, etc. So as long as, I think the beauty of our industry and our ecosystem in general in the world is it's so global that it's almost irrelevant of the geopolitical climate, and it's very easy to pivot and change. That's why you would see unicorns come out of war zones easily. So when you compare that to Turkey, no, Turkey is pretty stable, especially for investment theses, export revenue, global value chain, global follow-on funding, global exit.
And I'm thinking that since your thesis, you have come from focusing a lot on Turkey to then now focus more on Eastern Europe as well. I'm curious to understand what has taken you through that path. What has led you to Eastern Europe rather than just Turkey, and also maybe both the positive things about Eastern Europe, but also why isn't Turkey enough?
Sure. So our fund one was a $10 million vehicle, and we did 40 investments. 12 of them were Eastern Europe. One of our centaurs was Plum, which is a Greek company, for example. So we did investments in Greece, Ukraine, Romania, Bulgaria, Hungary. Actually, we did 4 investments in Ukraine, for example, one in Lviv, 2 in Kiev, 1 in Odessa. So we were doing Eastern Europe in Fund 1 as well. With Fund 2, it's a 50 million euro vehicle as opposed to a $10 million vehicle. So as the fund grows, market depth in Turkey, it is what it is. You cannot actually create entrepreneurs from scratch, and we needed a deeper deal flow, which is what we got in Eastern Europe, and we had success in Eastern Europe. Our first exit was actually a Bulgarian company called Cloud Pipes. Not our first exit, but our first substantial exit, let's put it that way, was a Bulgarian company out of Fund 1. So we had a great Greek success story. We had a great Bulgarian exit. It was only relevant for us to try and test it out. And looking from market dynamics perspective, Central Eastern Europe is not a region. LATAM is a region. MENA is a region. Southeast Asia is a region. Central Eastern Europe is not a region. And the reason why I'm saying this is, if you look into LATAM, the playbook is pretty straightforward. You would start in Brazil, for example, or in Mexico, and then you would become a unicorn across 10 different countries. Same for MENA. You would start in Dubai, you would start in Abu Dhabi, wherever, and then you can go Saudi, Egypt, etc. You become Kareem, you become Noon, you become Souk. Southeast Asia, similar story. You can easily become Malaysia, Indonesia, Singapore, etc. You're a unicorn. We don't have that in Central Eastern Europe. None of the Central Eastern European companies and the technology companies expand from one country to another. And there are multiple reasons for that. But I think the most important is there are 25 different countries, 25 different languages, 25 different cultures. So all of these ecosystems are almost very dispersed and fragmented, and they're much more connected to global hubs like New York, London, or SF than each other, which gives us the opportunity to go and be able to have access to the best deals out there. I think if the ecosystem was much more connected in Central Eastern Europe, then you would have more Central Eastern European funds who are deploying across 20 different countries, who've built a brand for themselves, which would make it much harder for us to tap into. Plus, the investment thesis would have been way different than what we do here in Turkey. Whereas now with dispersed, fragmented ecosystems, all trying to be global rather than regional, and with strong ties to New York, SF, London, Berlin, wherever that global hub is, really correlates to what we do here in Turkey.
So Enis, different question from our audience. Ugur asks, what's the one company you invested in that really excites you, and what do they do? Obviously, this is one of the questions that are very difficult to ask any VC, because you have a portfolio of whom you all love. You brought up 3 examples in your presentation, and I'd say feel free to pick whatever, and then say why do you pick that one right now, and not playing favorites with anyone.
I'll pick one from our investments from past year, so that all of them are going to be pre-seed seed. Because I mean, I don't want to cheat and pick a unicorn, right? Doesn't stop.
That's too easy.
It's too easy. Out of our last 10 investments that we did in 2021, I think from a premise perspective, the one that excites me the most is a company called Gesund. I think it's the riskiest one, by the way, but also has a big outlier potential as well. The reason why it's very excites me is the impact that it would create. So what Gesund does is, again, starting with the founder. Founders Enis, Carnegie Mellon grad, Carnegie Mellon PhD, used to have an AI company in the energy space. I met him back then, 2016, 2017. He was then the chief data science officer of a German unicorn called Care Syntax. And it's a health tech company. At Care Syntax, he saw that it was almost impossible to get access to data to train AI algorithms in health because of compliance reasons, especially. So you have to bring a lot of noise and anonymity to the data, which makes it impossible. Plus, the contracts are way too expensive because of all of this compliance risk. So if you're a long tail med tech, health tech provider, you need access to data, but you don't have that much capital, it's almost impossible, which means all the big pharma, et cetera, they have access to data, not the long tail startups. So what Gesund does is it started as an MLOps company in the federated learning space. So instead of the data coming towards algorithms, it actually pushes algorithms on premises to where the data is. Algorithms get trained, and you just take the algorithm back, which is already trained, and you do that in multiple premises, not just only in one, which means you have access to non-noisy data, because from a compliance perspective, there's no data leakage out of the hospital or clinic or wherever the data resides. So that's one. Two, it makes it much more easier because the compliance hurdles are down. The hospitals can actually have more smaller contracts that can be given to a bunch of different medtech, health tech providers who actually need that access to data. And thirdly, it's so revolutionary that it's not only health, but moving more and more as data becomes more siloed, especially in Europe, where you have, God knows, 30 countries, 30 regulations, all of the data on premises can't be taken out. In this data siloed world, not just in health, but also, for example, in fintech, you need federated learning to be able to train the data. And if AI is going to come, and I mean, if you look into the current AI projects, 80% of the time is spent on data. About 80% of the bottlenecks are on the data layer, not on the modeling layer, not on the development layer, etc. So Gesund can actually unlock a lot of value, not just for health, but for a lot of different industries, just because it views stuff from a different perspective. So I guess Gesund is the one where it might potentially create a huge impact for all of us, just by enabling a lot of medtech providers to have access to the data and have better health AI.
Awesome, Enis. We have 10 minutes left, so I want to start rounding it off in a summary-like style. So what I'd like to ask you, Enis, you said a while ago that was this misconception about the region that you guys are actually trying to debunk. So I'd like to kind of ask you, what are the myths about the region that you'd highlight as the biggest myths about Turkey and Southeast Europe?
Biggest myths. I think the biggest myth about Eastern Europe and Turkey, and if you speak with any investor, they would say that everyone knows there's talent here, right? There's talent everywhere, but there's also talent here. So no one doubts that there's talent in Eastern Europe and Turkey, but they say that people lack business acumen, sales skills, marketing skills, etc. But I think those things are learned by doing, and we needed more success stories and more startups so that more people who are coming from non-technical backgrounds start to get employed in startups and get some sort of a technical expertise, while also being really strong in sales and marketing, which is what's happening. So the biggest myth is that the fact that people thought that our region, people lack that, was a myth. And it was rather that us as a region, since we didn't have these big powerhouses, big unicorns who are taking talent in from all these different consulting, investment banking, or sales jobs into our industry. But now we can, and now we are. And now you see this new type of founders and new type of personnel who are very strong in sales and marketing, but also has the technology knowledge because they've been with startups for the past 3 to 5 years, which is what happened in the US. So those technical salespeople, and people thought that it was lacking. It's really not lacking.
And also summarizing, Sal, we've been talking about the Turkish startup boom. You did a presentation, you asked a bunch of questions. If you had to leave us all with 3 core messages or 2 core messages, whatever they are, the number doesn't really matter, but core messages about the Turkish startup boom, what would they be?
I think the core message for Turkey is back in 2008 till 2013, if you look into the startup ecosystem in Europe, I'm not just saying Middle East, but Europe plus Middle East, let's put it that way, Turkey was one of the leading countries. I mean, Turkey was better than a lot of the Western European countries even. But then after 2013, because of the lack of investor appetite, funding levels didn't grow in Turkey for 7 years, whereas it did for other countries like Egypt or Saudi. And when you come to 2018, 2019, it was always the funding. So the input of money, the influx of money to Turkey was almost equal to places like Egypt or Saudi, but the output is not. And 2021, 2022, Turkey has been showing that in terms of number of unicorns, Turkey resembles more of a Western European country than Middle East. So I think it's going to continue to be that way as long as we have the influx of capital. The influx of capital stopped after 2013 because of various reasons, but that has flipped again. And the influx of capital between 2008 and 2013 gave birth to multiple unicorns like Peak or Trendyol. And the current influx of capital obviously is going to give birth to even more unicorns 2025 onwards.
So to round it off, we've debunked 1 or 2 myths. we bought that there's an opportunity. I think the most important and final question is, we all know it, VC is a game of access. And so why are you the guys that are going to be able to seize this opportunity?
Good questions. I think it more comes on a personal level. I think what makes our business beautiful, what makes our business beautiful is this is a money business, right? And capital is a big commodity. Not in our business. It's much more a human-driven business. And us as fund GPs, I feel like we have the best access to entrepreneurial talent in Turkey, period. And entrepreneurs want to be together with people who actually can understand and talk their language way more than other GPs. So if there were 2 or 3 other funds like us in Turkey, I would say that we would have big competition and the valuations might even go up by 2x, 3x, but currently it isn't the case. So it's our access to entrepreneurial talent and being able to speak their language and be on their side in good days and bad days is what has differentiated us and made us build this brand in Turkey for the past 6 years.
Awesome. Enis, we have 5 minutes left. So I don't know, is there any final word you'd like to share with everyone listening in? I think we managed to reply to almost every single question. If we didn't reply to yours, we just have a funny one coming in. I will not ask it. I will text it to you.
Ask it. I'll read it. Are there any investments
that you regret?
Of course there are. We always try to, any entrepreneur that we back, know that at the time of backing, we feel like she or he is smarter than ourselves and is better than ourselves. So I wouldn't back myself at all as an entrepreneur. So that's always the understanding. If we're backing a founder, it's because he or she is better than us. And then as you start spending time with them 3 months, 6 months down the road, sometimes you regret that decision and feel like, oh shit, maybe this wasn't the case, which are the biggest regrets that we have. Because I think what we do as a fund is we try to find outlier returns, right? We do 40 investments so that 3 of them can become unicorns. We try to make sure that we pick founders who are doing the same as well. As they get that couple $1 million funding, they're going to take bets. They're going to take long shot bets who have a chance of 5 to 10% rate. But if they actually make it work, then they would earn much more than 10x or 20x. They would maybe earn 100x as a company from those small bets. So those entrepreneurs, they might fail because they're taking these long shot bets. Doesn't mean they're bad entrepreneurs. So when we find those entrepreneurs who have actually tested a lot of stuff, took a lot of shots, but failed, if we still believe that the founder is way better than us, and if he or she still believes in the business, then we continue to back them. The ones that I feel the most disheartened are the ones where after we invest, the company becomes very precious. So they start to be more risk averse, and they start to have their feet on the ground and more of a stable growth trajectory so that everything's under control, which is never the way to have an outlier return or an explosive kind of return. Those are the ones where I get really discouraged after 3 or 6 months of investment.
That Enis, can only think also leaves you with quite some time with the existing angel base, because that's the mindset of that one runs contrary to the mindset of many angels, especially in Europe. I'm curious to hear, you talked about cap table problems earlier on today. How much does that influence your decision, the existing investor base, and what has happened over the last year or two?
Again, these are all red flag reviews for us. I mean, like a cap table wouldn't change our decision positively. A technology that's stunning wouldn't change our decision positively. It's more like we give the decision based on the founder and then make sure that everything's in place. Cap tables like that as well. Before we invest, if there's an investor that has already taken a 25-30% chunk of the company, and us coming on top of it like 10-15% ownership would be actually very deadly for the company from the get-go. So we wouldn't touch it.
Yeah. Not very interesting. Yeah, we don't have more time where we could dive a lot into this because it's always an interesting topic. Enis, is there anything you want to leave everyone with, or are we allowed to round it off and say a few words?
Turkey is great. What's better than Turkey is the Turkish startup ecosystem. I think like what stuff that's been happening in Turkey and the perspectives. I mean, there are multiple ways to look into it. People can like it, people cannot like it, but the success of the Turkish startup ecosystem is obviously out there. I don't think it's impossible to doubt that, given the number of unicorns, number of investments, the fact that we were able to build a decacorn in 4 years out of Turkey that expanded into Europe kind of speaks for itself.
I can only say that we completely agree from the European VC's perspective. That's also why we are so excited about doing our investment into you through our investment club. If anyone have been hyped around the Istanbul opportunity and Enis's fund, then for sure do join us in the club. Guillaume shared the link earlier on tonight. We'll also follow up with a bit of information on that, so you can join us in that syndicate to bag Enis and his team. And everyone, next event from our side is actually already on Monday. We're going to be talking about how to create category kings as a VC. It's going to be with Al Ramadan, who is the author of Play Bigger. So he's a pretty cool guy, and also David Peterson, the newly 6 months ago now made partner in Angular Ventures, which is one of the best funds in London. So that's super cool. Everyone, thanks so much for joining us today. Anyone having any last remarks? I don't think so. Great. Take care. Thanks a million.
Ciao.
Bye, everyone. Thank you.